Axis Bank reported a strong fourth quarter, in many ways starting a new financial year under new CEO Amitabh Chaudhry on a strong note. But there is a lot to talk about what has been happening in the few months that he's been in charge and what he's going to be focusing on in the year ahead. He's joining us here for this conversation on Bloomberg Quinn. Thanks so much for joining us, sir. So I'm going to start a big picture question. What's changed since you've been here, both in terms of priorities for the bank, but also in terms of dealing with the legacy issues? Where are you at, you think, in the process?
So I think every leader has his or her own style of working, and I think Shikha had a long stint here and obviously did a lot for the bank, a lot of positives can be talked about. She had her style of working and she'd been around, so kind of the pulse of the bank very well anyway. I mean, I guess there is my style and I'm sure people are perceiving that difference. What I did when I came here was that, we're not going to get into why and what happened. Let's look at what we need to do going forward in the future. So, we focused on coming up with a strategy. We've shared with the larger organization quite extensively. We rolled it out to 2,000 people in a short period of time so that people first get aligned to what we intend to do in the next 3 years. Then we obviously had to create a structure which was aligned to that strategy. We announced a new wholesale and retail structure on 3rd of April itself. And obviously, if there were some people who were required to be brought in from outside or appointed internally to kind of fill that structure, we have done that also. So kind of all the top management team is in place so that we could hit the ground running in the first week of April itself. Obviously, all the leaders are not necessarily in place, so it will take a little bit more time, but most of the leaders are. But all the leaders have been identified. And third and foremost was that, one of the most important elements of the strategy was sustainability. So we said that while a lot of work has gone in over the last couple of years in looking at all the issues which we have, putting our arms around it and acting on them, I think we've got still some distance to cover. I maybe have added an extra dose of conservatism to it and said that, we need to be seen as a sustainable organization. We need to become more predictable. We need to become more conservative in our process, in our way of thinking, how we look at compliance, in terms of our provisions and so on and so forth. So that when investors invest in us, they see us as an institution which, is not going to surprise them tomorrow, negatively especially. Positive side, of course, but at least on the negative side. And for us to be able to achieve that, first it will take some time. Secondly, we need to put in many more controls in place than what we have today. And that's what we are in the process of doing. And I have, on a very transparent basis, talked about that internally and externally. I think there were some gaps in our structure. We have gotten people from outside. We got a positive reaction from the market in terms of the quality of people we have got, and I think we've been able to attract. People are seeing Axis Bank as a franchise which can be taken to a different level. That's good news for us because we can get that talent. And hopefully people internally are also seeing it that way. Because when we have done internal job postings, the level of interest which people internally have shown has been incredible, which is great for us. But till now, I think, I've taken over 4 months back. There are more words. There very little action has happened. Yeah, some action has happened. Strategy, structure. We need to execute and show numbers. Yes, the last quarter numbers were decent, but we've got a long way to go. So I keep telling people, okay, the words part is over. Action part is what is left, and we have to do that consistently, credibly over the next 3 to 4 years. Let's get cracking, and that's where we are today.
Okay. Let me ask you some of the numbers. So in the investor presentation, a couple of places you said you're more or less back to what was steady state. So on credit costs, you're a little above that. I think on the BB book, the lower rated book, you're more or less back to 3%, I think the presentation said. But obviously the NPA numbers are still way elevated. You'd like to see them, stabilize at a 1-2% ratio, which is what we had in the past for Axis?
So we have guided slightly over the longer term couple of things. One is we have said that we expect our credit costs to ultimately trend down to below our long-term average, which is 100 basis points. Now, it's a combination of credit costs on the wholesale, SME, and the retail side of the business. Obviously, the portion which is elevated here is the wholesale side. And yes, our hope is that over a period of time we can get it down. Now we have a legacy book. We have 7,480 crores out of BB, just the below corporate book. We need to ensure that we kind of, and the majority, 58% of that BB book is composed of power assets and EPC construction kind of assets and road assets and stuff like that, some real estate. We need to obviously, and a lot of these are legacy assets in the sense we need to work our way through. We had taken some land in lieu of loans. We started providing for it last quarter. We have another 3 quarters to go. We have taken some security receipts. We need to work through that. We are not seeing any signs of any issues in either SME or the retail book, but we potentially have to be ready that tomorrow a crisis could happen there. So one is that credit cost. Second is we need to work on our cost itself, our operating expenses as a share of assets is 213 basis points last quarter. We have said to the market we'll get it down to below 200 basis points. So that's something we need to work on. We talked about our growth rates being 5 to 7% better. So a number of areas we pointed to. Obviously, we have many more metrics we are working on, but from a market perspective, we have mentioned that. So the trend is in the right direction, but I don't think the problem is over as yet. We have still got some work to do to kind of get over and beyond it. The good news is that the assets that we've created in the recent past, over the last 4 or 5 years, are of good quality based on whatever data I have seen. We have done a page turner on each of our assets, and we are comfortable with, or at least we have arms around it in terms of what they could lead to. But new, weaknesses are emerging in the system. Yeah. On the corporate side, NBFC crisis could cause a problem even on the retail side. So we have to be very cautious, and that's where this sustainability and the conservative angle comes in. We need to ensure that we become more sustainable. If it means that we don't want to do certain businesses, if it means that we have to leave some business on the table, we will walk away from it. We are very, very clear on that. So at least the management team is very, very aligned. Sometimes the most important thing is to say no, not to necessarily say yes. We need to get the no part right. I think we have started on that journey, but it will take some time to get there.
Okay, so provisions stay elevated for a few quarters, both on the legacy book and some of the new troubles that are coming up. That would be fair to assume, right?
We are not there in some of them, but we are there in some of them. So.
Yeah, so they will.
Without taking any names, yeah.
Okay. Second point is that, how easy or what is your strategy towards resolution? IBC is creating its own problems. It's not like it's happening in a rush. Are you selling down loans? What are you doing with the
So if you look at the data on IBC, 1,850 names out, I think have gone to IBC. Only that many have got resolved. A lot of them have actually, more than 50% of them have been resolved through, whatever has been resolved is through liquidation. I was just seeing that data recently. Average time they're taking is 300 days. So yes, the recovery is taking time. Recoveries have happened, they're taking time. But I think we have to be patient. It's a new process. A lot of entrepreneurs are not necessarily ready to go through that process. So a lot of litigation going on, a lot of rules are getting resolved or getting enshrined as we speak because new kinds of problems and things are coming up. I think as we progress, hopefully this will become much smoother than what it is today. Secondly, please, it is giving a very, very important signal to the promoters themselves that once it goes to NCLT, it is out of your hands. Yeah. And I think then promoters realize that if they do want the asset, they better resolve it before it goes to NCLT. Because if once it goes to NCLT, it's out of the promoter's hand and the bank's hand also. Because it's gone through a process now, and the process literally determines the outcome. So a lot of promoters are now kind of coming to the table and trying to resolve problems which earlier they might not have been interested in. Now people are immediately kind of then say, oh, but this February 12th circular. So before you ask the question, I try to answer it. The February 12th circular, the only thing it was forcing the banks to take a certain action in a certain time frame. I think it does not, hopefully the new circular, is not going to prevent the banks from taking the action if they want to. So the voluntary action will still be permitted, which is exactly what problem even Supreme Court had. And I think given the experience some of us have had, I think all of us or most of us will try to continue to follow the spirit of the February 12th circular because it was a step in the right direction. So,
including the fact that at one day you should start finding resolution, because I think absolutely, a lot of your peers have opposed that. I mean,
so from our perspective, at least, when we've talked about it internally, we are saying that it was a good thing. Okay, yes, there could be some circumstances where the promoter is working very hard and we can see the light at the end of the tunnel and they need a little bit extra time. Okay, I can understand those few and far between cases, but otherwise there has to be a time limit to this, and in that time limit, if things are not getting resolved, we need to move to the next step. And we should, and we will. Why should we not? So I think we need to have that resolve, and we will do it if necessary. So I think the fact that February 12th circular is not there is not bothering us too much. I'm sure RBI will come out with something different. But even on a voluntary basis, if we are allowed to go, we will go and we should go.
Sorry, to come back to the recoveries part. So the whole issue, whole thought that banks will sell down these loans to ARCs, that's not really happened, right? Despite the number of ARCs being in the market.
So the experience on the ARC side is that yes, we have security receipts, and we have, I mean, we did go through that process some time back. I think we have realized that in some cases it made sense for us to just stick around because the recoveries will be very good. I think many more funds have now emerged which are willing to buy at a price which makes sense, because right now the prices which ARCs are willing to offer and what we could see as recoveries, because all of us have gained experience, was not making sense. So we went through a process or a period when kind of a lot of things were being getting done with the ARCs, and then kind of pretty much after that there was a drought, and hopefully with many more funds emerging and ARCs also kind of, the whole thing stabilizing a little bit, you will see a mix of both happening. Some of the banks will take a call and saying, I just don't want to go through the process, and start selling back to these, call it distressed funds or ARCs. And some of them will say, we have enough experience and we see more value by sticking around. So right now, I think none of us are really selling, at least we are not selling anything to the ARCs or distressed funds, but we are actively looking at it. And if the prices are right, we will sell to them. We have tried to do some auctions. We've not been very successful because some of our assets which are going through crisis are power assets, and while you have seen a number of bidders on the steel side, on the EPC construction side or on the power side, the number of bidders have been very, very few. Yeah.
Let me move forward. So I think 63% of your book is already retail and SME, and yet you're saying that the focus is going to be on retail, SME, working capital loans at most. You'll be cautious on project finance. So essentially, Axis in 5 years is very similar to HDFC Bank.
No, we are not trying to emulate anyone here, but please understand that Axis Bank has been a powerhouse on the wholesale banking side. There is a clear consolidation happening, and let me just be very clear what I'm saying. I do believe very strongly that on the wholesale banking side, there will be 5 to 8 players, and I'm being generous here when I say 5 to 8. 5 to 8 players who will emerge, who can provide full suite of services on the wholesale banking side in terms of not only just loans, but all the kind of other products on cash management, treasury, FX, custody, and being able to do bond issues and equity capital issues, etc. I think we have this unique opportunity to be one of them. We're already one of them. There's a unique opportunity as this consolidation happens to emerge as one of those 5 players. It will be stupid on our part to let go of that space, because there's enough money that can be made, because in each of these sectors in financial services and banking, it's the top 5 players which get disproportionate share of income. So we want to be one of those players. So wholesale is an important part of what we want to do. Yes, retail might be growing at a slightly different rate than that of corporate. So in the overall share of business, wholesale might be looking lower. But I do believe we want to have the balance, and we will get this balance right over a period of time. Obviously, wholesale has been on the receiving end of things over the last 3-4 years. But I want the wholesale team to start looking forward and start generating more business. We grew at 18% last year on the domestic loan advances. We have created some more groups to bring sharper focus to our wholesale franchise. So we have created an MNC group, we have created a mid-market corporate group, and we want to grow that business because we believe there are huge opportunities there.
But you don't want to do infra, you don't want to do project financing like every other bank. So, I mean, who's going to do that business in the country?
It's not that we don't want to do infra or project finance.
You still think there isn't enough sort of risk-adjusted return in it?
Because I think the regulatory issues, broadly defined, are time indeterminate here, in the sense that...
But IBC should have changed some of that, right? That was the whole point.
No, IBC is changing the resolution process. We are talking about doing project financing. That means I'm, funding projects here. Now, we don't know. It's just not possible to predict or put your arms around whether someone could go to a court and stall the process, or some regulatory authority could take a different stand and bring your whole, the project infrastructure you created to a grinding halt because they've changed their mind. And you cannot mitigate those risks. So unless, like for example, let me give you an example on the positive side. NHAI has come out with this hybrid model, and they are getting funded. It's not they're not getting funded. But the government then needs to come out with some of those models where some of these risks can be taken care of. So for tomorrow, there has to be some kind of backstop, where if something happens, which is unexpected and driven by some part of the government, that we need to have a mechanism in place which pays us out. We can't be on the hook then for the next 10, 15 years wondering how this project will ever see, go into commercial production of some kind. So I think that's why people are stepping away. And till that is resolved and we are convinced that those risks are taken care of, I think no credit committee, including that of the board, will approve any new transactions. It's very, very difficult. Because please understand that we have shareholders, we have the regulator, who are questioning us as to why you're taking those risks when there are no returns.
No, I get that point. Okay, so this is more a lament, and we spent years complaining about the fact that every PSU bank was a clone of the other, and now we're going to have private banks which are all pretty much doing the same thing: retail, SME, little bit of picky AA, AAA, corporate lending, working capital, and that's it. I mean, that's not good for the economy.
Oh, it is not good. So the new projects, that means, well, what will happen in the new projects? That means the promoters you will back have to put in more equity upfront, or they have to do it in companies where they are well structured or capitalized. So yes, it is putting more onus back on the promoter in comparison to what we had in the past. And yes, the promoter returns as a result go down, or they will not invest in some of those assets, or people will continue to do kind of brownfield kind of expansion. So in a way, the companies who are already there, who are large enough, will be the ones who will continue to benefit going forward. New entrepreneurs might not necessarily come because they are not willing to take that kind of risk. It happens. When you go through a crisis like this, the pendulum tends to swing, quite a bit. But at the same time, at least in banking, the lessons at least I've learned when I used to be a banker is that all of us have drawn a line in the sand today and said that we'll not do X, Y, Z. But I think the markets and you not sticking to what you want to say no to sometimes shifts that line in the sand to taking more risk over a period of time. I do hope that the Axis Bank sticks to the line in the sand for much, much longer than some of the others, so that when the next cycle comes, hopefully we are much better off than some of the others.
Okay, a couple of specific questions back to the bank, sorry. So retail and SME growth should hold despite the fact that we've had a long run of strong retail growth. That cycle isn't turning? Yeah,
because we are 83% of our retail lending is coming from existing to the bank customers. Our penetration of existing to the bank customers is much lower than what some of the larger banks have. We also have, we have 100% own subsidy free charge, which is a wallet company which has a large number of customers. We're not tapped into it. We are a large player on the UPI side, which is a large player on the foreign exchange side. So we also know a lot of customers who necessarily might not have a savings account with us, but are using us for some of the other services. So we can also reach out to them because we know something about them, and give them loans, and hopefully have better underwriting capability than some of the others. So we do believe that the headroom for growth for us on the retail side remains very, very large, and we'll continue to work on it as we move forward.
Is there a specific strategy needed on liabilities? At a system level, there seems to be an issue.
Well, so the good news is I was just reading an article the other day that the savings rate in India for the last year has inched up back to 11%, which is good. I think people are not recognizing it enough. It had gone down to 9%, it has gone up back to 11%, and this article talked about how some of these savings maybe is not being incorporated in those numbers.
That's Neelkan Mishra's report, which is heavily debated.
So let's assume, forget about the rest, apple to apple is gone up. But yes, the fight for CASA is very much real and live as we speak. I think apart from giving you better NIMs, those are the kind of customers you want, who are stable, who are transacting with you, using a lot of your services. We have seen our share of CASA fall over the last 3 years, and we need to get it back. So in one of the kind of strategic imperatives for us will be to kind of change our CASA ratios. It will take time. It's not that overnight you can change it. So we have in our structure announced some changes where a specific team will focus on that. We are investing also in our outbound contact centers to ensure that we can reach some of these customers differently. So our scale of investment in some of those areas will also go up. But it's if you look at our strategy which we announced to the market, one of the first things which we said is bring back growth in our deposits. And because we realize that it's an important strategic imperative for us.
Okay. External benchmarking that SBI has tried, are you at all going in that direction, either for deposits or for loans?
SBI is large enough to be able to
take
the chance and go for those experiments. I think for us to be able to link it to the repo rate and then link it on the other side is not going to be easy. So you'll see that apart from SBI, no one has really moved in that direction. It's not that we don't want to give the benefit to the customer if the transmission rate allowed us to do that. The problem is today the cost of deposits remains elevated, and it is very, very difficult that if the repo rate is brought down, that we can actually pass it on, as and when the rates, because all of us are living in a competitive scenario. It's not that I'm living in isolation here. If the market is giving one rate to the customer, I cannot go and offer a completely different, which is a higher rate to the customer. I'll not get any business. So, but yeah, the problem is that today the rates are what they are. And all of us would like to pass a benefit if possible, but our cost of funds does not permit us to do that. Obviously RBI is also seized of the issue. They've talked to everyone. They're pushing us quite hard, and they came out with a scheme also to link it to some other kind of rate.
And rolled it back.
And I think they're realizing that it's not such an easy solution. They're looking at it. Let's see what RBI comes out with. But it will, RBI, I'm sure, also wants to ensure that they don't create a different kind of risk in the system just because we want to link the external rates to some benchmark, which necessarily is not 100% correlated to what the cost of funds are. Yeah.
Two last questions. One, I know you alluded to it in the beginning, but there were concerns about compliance within the bank, the risk functions and how those were being managed. Can you help us understand, how you've changed that to ensure? I mean, the regulatory risk is something that you've said you need to deal with. Right?
Yes, I mean, we have had more than a fair share of our issues on some of those things. We have, first is the tone from the top. I'm not saying the tone from the top was wrong earlier. I think we just have kind of elevated it to a slightly different level. I think Shikha was very clearly seized of the issue, and we had worked a number of areas we need to work on. I'm just saying we need to work harder, faster, and we need to just be very conservative about how we look at things. So we are shutting down some of our businesses. We are putting many more controls in some of our businesses. And we are literally kind of sitting back and saying, do we need to be in this business or not? Or how do we go about it? Or should we go and seek RBI guidance before we go into those businesses?
Such as?
I don't want to go into specifics, but we're doing a lot of that.
On the lending side or on?
Across all of businesses. Second, because you talked about compliance. Second, we have elevated the position. So we earlier had a certain individual looking at it. Now a president level person is managing compliance for the bank. So I think it's a very important message internally that this is going to be looked at seriously in a very different way than in the past. And this individual has worked in different parts of the bank. So it's not that, we have actually pulled a pretty senior resource to look at this particular function. So for one is tone. Second is that the people who are managing it are of a different caliber and different level in the bank. Third is that I think whatever is being shown to us as a compliance risk or being pointed to as a compliance risk, we are monitoring the closure of that much more actively, much more closely than in the past. And even the board is doing the same. It's not just the management team. Even the board is, not very happy with where we are on our compliance journey, and they're also looking at it actively and demanding that we move on that front much faster than before. So yes, hopefully, and again, it will take time. It doesn't happen overnight. We will, in the next 12 to 18 months, be able to demonstrate to our regulator, and obviously, hopefully, the number of incidents will come down where the investors and the market will also appreciate that. I think the level of compliance for at least Axis Bank has improved dramatically.
And even incentive structures, and I think that had started earlier itself.
So I think you can't give incentives for this, but yes, you can hold people accountable for compliance issues, and you can take away all the incentives or promotions or whatever that you call it if compliance issues emerge in any of the businesses. So I think people understand that it's going to get tougher if compliance issues emerge, and some of those things have already started happening in the system, I think, which have never happened in the past.
Last question, again, this is more an observation, but I'm curious to know what you think of it. So, if you look at the private banks, you've had some which have had continuity, Mr. Puri being there for 25 years, Mr. Sopti, ICICI, well, change in leaders, but the same crop. Axis has been interesting. We had the Vijay Nayak phase, which brought with it certain characteristics to the bank, which changed quite significantly when Mr. Sharma came in. And now you're coming in and you're again sort of changing. Is that good or bad for the bank, or is it just what it is? It seems to turn cycles.
Well, I think, let me use that question to first describe the strength of the bank. Axis Bank has a great culture. I think the biggest strength of Axis, at least what I felt when I came inside, is its culture. Very warm, loving, very friendly culture. You meet people who have been here for 6 months, 1 year. You meet me who's been here for 4 months, or people here for 10 months or 10 years, or people who have left the bank after working for 20 years. Very, very fond memories of working in the bank. Everyone will say to you consistently, and I've talked to all kinds of employees at various levels, different vintages, who, first thing they say is, you love working here. Now, you can say it is a positive and negative attached to it, but I think that's a great strength. So the fact that different leaders have come and they've been welcomed with open arms and they have worked here for a long period of time, I think points to one thing, that it's an institution. A lot of practices are institutionalized, and we are not necessarily individual or single person driven. A lot of the institutions that you mentioned have seen CSOs and very successful, and people I really admire personally, but they have been there from the beginning, or been there for the longest period of time. And I think at some stage when these individuals would have to move on, I think they will struggle a little bit more, hopefully, in comparison to us, and will give us an opportunity to step up if we can get our game right. So from that perspective, I think we are better positioned. Yes, every leader, as I said from the beginning, brings a different style. But I think these institutions, as I said, the biggest strength is the culture, and they have been able to adopt to some of those changes very, very quickly. I feel that Axis Bank is adopting to my style quickly. Not that my style is dramatically different, but I'm sure there are shades of difference. And the reason I have a certain style and I'm pushing certain things is because I believe that's what the bank needs at this stage. And if we can execute well on some of the things we have outlined for ourselves, I'm sure we can take the bank to a different level.
I'll leave it at that note. Thank you so much.
Thank you. Thanks a lot.
Thanks.
Thank you.